Will Texas home prices finally drop in 2025? Or are we just going to see another year of small changes and sideways movement? That question is on the minds of a lot of Texans right now, from first-time buyers in Dallas to investors in Austin. Here's the short version. A big housing crash is very unlikely. Most areas should stay pretty stable, with maybe small price drops in a few places and a bit of growth in others. Austin could see the biggest declines, while Houston and San Antonio look steady. In this video, we'll look at why. We'll go through what happened from 2020 to 2024, what's driving affordability problems, what's going on in the major Texas cities, what experts are forecasting for 2025, and what it all means if you're planning to buy or sell. Remember, this isn't financial advice. It's just a breakdown of the data and trends so you can make informed decisions. The story so far, 2020 to 2024. Let's rewind a bit. In 2020 and 2021, when the pandemic hit, many people thought the housing market would cool off. But the opposite happened. Interest rates dropped to record lows, remote work exploded, and people from expensive cities like San Francisco and New York started looking toward Texas for more space and better affordability. Demand went crazy. Homes sold within days, bidding wars became normal, and prices shot up fast. Builders tried to keep up, but supply chain problems and labor shortages slowed construction. By 2021, Texas home prices were climbing by double digits each year. The median price hit around $300,000 and kept rising. Then, in 2022, everything started to shift. The Federal Reserve began raising interest rates to fight inflation, and mortgage rates jumped from around 3% to about 7% by the end of the year. That increase made monthly payments hundreds of dollars more expensive, and it cooled the market almost immediately. By 2023, buyers were backing off, sales were dropping, and prices finally stopped climbing. The statewide median price slipped slightly, down about 1.5%, which was the first real decline in years. But it wasn't the same everywhere. Austin, which had been the hottest market in the country, saw a real correction, roughly a 10% price drop that year. In contrast, places like El Paso and McAllen still went up a bit. So 2023 was a mixed year. Some markets cooled off, others held firm. At the same time, inventory rose and homes took longer to sell. The wild bidding wars were gone. Texas was moving back toward balance. By the end of 2024, the market had become much more normal, not crashing, not booming, just finding its footing again. The affordability squeeze. Even if prices aren't falling much, owning a home in Texas has definitely become more expensive. The three biggest factors are mortgage rates, insurance costs, and property taxes. Mortgage rates are the obvious one. Back in 2021, you could get a 30-year loan for around 3%. In 2024, that same loan might be at 6 or 7%. On a $300,000 mortgage, that difference can add several $100s to the monthly payment. Experts expect rates might ease a little in 2025, maybe dropping into the mid-5s or low 6s if inflation continues to cool down. That would help bring some buyers back into the market, but rates are still far higher than the record lows we had during the pandemic. Then there's insurance. Home insurance costs have exploded across Texas. Between hurricanes on the Gulf Coast, hailstorms, tornadoes, and the rising cost of repairs, insurance premiums have jumped more than 20% in 2023 and nearly another 20% in 2024. Texans now pay some of the highest home insurance rates in the entire country, often over $4,000 a year. Lawmakers have been discussing ways to slow those increases, like requiring state approval for big rate hikes and giving homeowners grants to make houses more storm-resistant. Those changes could help over time, but for now, High insurance costs are a real strain on affordability. And finally, property taxes. Texas doesn't have a state income tax, so it relies heavily on property taxes to fund schools and local services. The average effective rate is around 1.6%, which is one of the highest in the U.S. The good news is, state lawmakers recently approved major property tax relief. They raised the homestead exemption to $140,000, meaning that amount of your home's value isn't taxed for schools. For the average homeowner, that's roughly a $500 annual savings. It's not life-changing, but it helps a little, especially combined with lower school district rates. So overall, affordability remains tight. Mortgage rates are still high, insurance is expensive, and even with tax relief, many buyers are stretched thin. That keeps the market from heating up again and puts gentle downward pressure on prices in some areas. Austin, from boomtown to balance. Now let's talk about Austin, which has seen the biggest swings. During the pandemic, Austin's housing market went crazy. Prices jumped more than 60% from early 2020 to mid-2022. The median price hit around $650,000 at the peak. But once mortgage rates shot up and the tech sector cooled down, demand fell sharply. Builders had been adding new supply at a record pace, and suddenly there were more homes than buyers. By 2023, Austin's median price dropped about 10% in 1 year, and as of 2025, it's down roughly 15% from the peak. Homes are taking longer to sell, and active listings have more than doubled compared to the pandemic frenzy. This isn't a crash. It's a correction from unsustainable highs. Prices are still far above 2019 levels, and Austin remains one of the most desirable cities in the country. But the power dynamic has shifted. Buyers have leverage again. Most experts think Austin could see a few more small declines in 2025 before finding a stable floor. If mortgage rates fall and job growth holds up, the market will likely level out. Austin's days of skyrocketing prices are behind us, at least for now. Dallas-Fort Worth, soft landing. Dallas and Fort Worth had a boom too, but it wasn't as extreme. The Metroplex has a more balanced economy, with jobs in tech, finance, logistics, and manufacturing. As of late 2025, the median home price in the region is around $390,000, roughly flat from a year ago. In the hottest suburbs, like Frisco and McKinney, prices are down about 5 or 6%. But in core areas of Dallas and Fort Worth, prices are mostly steady. Inventory is much healthier, around 4 to 5 months of supply, and about 1/3 of listings are seeing price cuts before selling. Homes now take close to 3 months to go from listing to closing, compared to just weeks during the boom. The upside is that buyers are coming back as prices adjust. Sales volume has actually increased slightly, which shows the market is rebalancing. Overall, Dallas-Fort Worth looks like it's having a soft landing. The frenzy is gone, but the fundamentals are still strong. Houston, slow and steady. Houston is always a little different. It's the biggest metro in Texas, with a massive energy sector, a major port, and fewer zoning restrictions than most big cities. That flexibility helps keep housing relatively affordable. During the pandemic, Houston's prices went up, but not as sharply as Austin's or Dallas's. Now they've cooled slightly, but haven't fallen far. The median home price sits in the low to mid-300s, down just a couple of percent from last year. Inventory is up, but homes are still selling at a reasonable pace. Houston's affordability and steady population growth help prevent major declines. Unless oil prices collapse or there's a national recession, Houston should stay stable through 2025. San Antonio, affordable and resilient. San Antonio doesn't get as much attention, but it's one of Texas's most resilient housing markets. Prices here are lower than in the other major metros, which keeps demand solid even when rates are high. The median home price in San Antonio is in the upper 200,000s, down only a few percent from last year. Inventory is growing, giving buyers more choices, but the city's affordability keeps sales moving. In 2025, San Antonio will likely remain flat to slightly down. Nothing dramatic. It's still one of the best options for first-time buyers looking for value in a major Texas metro. Smaller markets, calm and steady. Across smaller Texas cities, things are pretty calm. Places like El Paso, McAllen, and Brownsville are still growing and even seeing modest price gains. Midland and Odessa, in the oil patch, move with the energy market, but so far they're holding up fine. More rural and affordable areas, like Wichita Falls or Beaumont, haven't seen big swings either. Since they never overheated, they have less to lose. In short, smaller markets are steady. No big bubbles, no big busts. What the experts are saying about 2025. So what do the official forecasts say? The Texas A&M Real Estate Research Center projects a slight statewide price increase in 2025, maybe around 2 to 3%. They expect home sales to rise a bit after a flat 2024, and for building permits to grow slightly as supply keeps improving. The Texas Realtors Association has a similar outlook. With inventory close to balanced, around 5 months of supply, they expect prices to stay mostly steady. In short, the experts see stability. Some metro areas could slip a few percent, others might climb a bit, but nobody credible is forecasting a crash. Most analysts agree that Texas's strong job market, population growth, and active construction sector should keep the housing market in equilibrium. So if you're waiting for a 20% drop across the state, you'll probably be waiting a long time. Supply and demand, the real balance. Let's break it down. Prices drop only when supply overwhelms demand. Texas simply isn't there. Yes, inventory has increased, but mostly from record low levels back to normal. Builders are cautious and aren't flooding the market with unsold homes. Many existing homeowners are sitting tight because they already have mortgages at 3% and don't want to trade up to 7%. That rate lock effect limits the number of homes for sale. Meanwhile, Texas keeps growing. The state's population is projected to rise by around 300,000 to 400,000 people a year. That's a lot of new households needing places to live. Job growth has slowed a bit, but remains positive, and that continues to support housing demand. Investor demand has cooled from the pandemic peak, but hasn't vanished. Large investors still see Texas as attractive long-term, so the overall picture is balanced. Not too many homes, not too few buyers. That's why the most likely outcome for 2025 is a stable market with modest local shifts. Government and policy factors. Texas policies also shape the housing outlook. Unlike some other states, Texas generally supports development. Houston doesn't even have traditional zoning, and most Texas cities are relatively flexible about new construction. That keeps supply flowing and prevents massive shortages. At the state level, lawmakers have focused on property tax cuts and exploring ways to make insurance more manageable. There's also new funding for affordable housing and programs that encourage building on unused land. Together, these steps help make home ownership a little easier. Not perfect, but better than before. And they add stability to the housing market. Buyer and seller sentiment. Now let's talk about how people are feeling. Buyers today are cautious but hopeful. They finally have more choices and time to think before making an offer. Many are negotiating for closing cost help or temporary rate buydowns from sellers or builders. The phrase, "date the rate, marry the house," is becoming popular again, meaning buy the home you love now and refinance later if rates drop. Sellers, on the other hand, are realizing the market has changed. Pricing a home right is crucial. Homes that are clean, move-in ready, and priced fairly still sell. But the bidding wars and weekend sellouts are gone. Patience is part of the process again. Investors are taking a similar approach. They're not panic selling, but they're not buying aggressively either. Some who bought at the very top especially in Austin, are trimming portfolios or waiting for better margins. Others are quietly picking up good deals while things are calm. Overall, sentiment across Texas could best be described as cautious optimism. The market feels normal again, and that's not a bad thing. If you're buying in 2025, if you're thinking about buying, this market can actually work in your favor. There's more inventory, less competition, and sellers are more flexible. Still, focus on the full monthly cost, not just the price tag. That means including insurance and taxes in your calculations. Compare new builds with resale homes. Sometimes builders offer rate buydowns that make a big difference in affordability. And don't rush. Take your time, negotiate, and choose a home that fits your budget comfortably, even if rates stay higher for a while. If you're selling in 2025, if you plan to sell, the best thing you can do is price your home according to today's market, not what you think it was worth 2 years ago. The days of automatic bidding wars are over. Make your home look move-in ready. Small fixes, a little paint, and a clean presentation help a lot. Pay attention to what builders are offering nearby, because new homes with incentives can pull buyers away from resales. You might need to adjust your price or offer some closing cost help to compete. And most importantly, be patient. Homes are taking longer to sell now, and that's okay. If your home shows well and is priced right, it will sell. The clear answer. So, will housing prices drop in Texas in 2025? Probably not in any dramatic way. We're seeing a patchwork across the state. Austin may dip a little more before stabilizing. Dallas-Fort Worth looks mostly flat, with small changes depending on neighborhood. Houston and San Antonio are holding steady. Smaller cities are either flat or rising slightly. Affordability challenges are real, but Texas's strong economy and growing population are keeping demand alive. Builders are active, but not enough to flood the market. The result is balance, and balance usually means stability. Final recap. From 2020 to 2021, prices exploded. In 2022, the market cooled as rates climbed. In 2023 and 2024, we saw the first real correction, led by Austin. By 2025, the market is stable. Affordability is tight, but property tax relief and slower insurance hikes help a little. Inventory is back to normal. Builders are building, but carefully. Buyers are back in control, and sellers are adjusting to reality. Texas real estate is returning to something close to normal. And after the wild swings of the last few years, that's not a bad thing at all. Thanks for watching and for sticking with me through this deep dive into the Texas housing market. If you found this helpful, hit like and subscribe for more real estate breakdowns. And tell me in the comments, what are you seeing where you live in Texas? Are homes still selling fast, or are prices starting to dip? I'd love to hear your local stories. Remember, this video is for information only. Everyone's situation is different, so always do your own research before making big financial moves. Here's to smarter decisions and a stable housing market in 2025. See you in the next one.